welcome to this special chat with Professor Aswath Damodaran. He is the guru of corporate valuations and has been invited by Duff & Phelps, the global corporate finance advisory company, to speak about the turn in valuations with the turn of the year, as it were. 2016 gave us the first winds of change in terms of challenging globalization. In India, it ended with demonetisation. So many changes and all those questions to Professor Aswath Damodaran. Thank you very much, Professor, for joining us.
Thank you.
Well, first up, just over the last few days, we've got this scintillating change of events. Donald Trump has shouted down the dollar. I mean, it's a market-determined currency, but he says it's too strong to be good for the United States. And almost at the same hour, Xi Jinping was at Davos extolling the virtues of globalization. What does all this mean to you? The world looks turned upside down.
I think first we've got to step away from the noise, because I think you're going to see this kind of phenomenon. It's not just from yesterday. You're going to probably see this a lot more over the next 4 years. But ultimately, I think we have to keep reverting back to fundamentals. And I think what we discovered in 2016 is the power of stories over numbers. And then you saw it both in Brexit is a simple, powerful story, even if it's not realistic, will win out over a collection of numbers. If you take Brexit, for instance, every person arguing against Brexit used numbers to back it up. If you do it, this is what will happen. If you do it, this is what will happen. But the counter was a story. If you leave the EU, we're going to go back to the old Britain. It might have been a story that was not realistic, but stories beat numbers. And I think, in a sense, what you're seeing play out now is how much that storytelling affects markets. So it's going to be interesting.
You know, I'm used to numbers, so I will perhaps be asking you for numbers and quoting numbers myself. And the most important of them is really the dollar. Because of the way Trump has shouted down the dollar, especially after its last 8-10 week rally, what does 2017 hold for us? Will it be a strong dollar story?
I think the real core of the story is what happens to T-bond rates. If you look at what's happened between November 8th and today, I think on November 8th, the T-bond rate was 1.8%. Today it's about 2.5%. That's a 70. And I think what's interesting there is cast as a lie this notion that the Fed was controlling rates. Because the Fed wasn't it was really a reflection of changes in expectations. And as rates rise, the dollar strengthens. And especially because its competition is so weak. And the euro rate's close to zero, the Japanese rate is negative. And as long as those fundamentals hold, the dollar is going to, so you can try to talk it down, but it's going to continue to rise simply because money will flow into the dollar. So I think that is going to be the number to watch over the next few months, and perhaps over the years, what happens to the T-bond rate over the next year. Because if that continues on its upward path, which I think it will, you're going to see the ripple effects, not just in the dollar, but in equity markets and bond markets around the world.
Okay, now let me use your own analogy. The story of the last 10 weeks has been that Trump is going to make America strong again, that he's going to give tax cuts, and that economy will boom more than other economies. Therefore, there was a long US markets, long developed markets, short emerging markets trade plain. Right. Will that be a large part of 2017?
I think parts of that story don't hold up to a reality check. I mean, you cannot have hundreds of billions of dollars in infrastructure spending and tax cuts at the same time. So I think parts of the story are more likely to come true than others. To me, the part of the story that is most likely to have a big impact is the tax story. The U.S. tax code is perhaps the most perverse and badly designed tax code in the world, and that's quite a contest to win. But it's a tax code that was written in the 70s and the 80s when the U.S. was the center of the universe and could do whatever it wanted. So the global tax system that the U.S. adopts, which has never made sense to me, is a tax system adopted in the 80s where U.S. companies had no choice but to bring money back to the U.S. It's not working anymore. You've got $2 trillion trapped outside. So the very simple fix of the tax system is going to set lots of money in motion. If $2 trillion comes back to the U.S., that's going to more than cover whatever you need to pay dividends and buybacks for the next 3 years. So I think the tax code change is going to be the biggest part of what he's going to accomplish. And the reason it's going to happen is this is one of those few things where both Democrats and Republicans seem to agree this doesn't make sense. We've got to fix it. So that part I think is going to get fixed. The infrastructure I'm not so sure about. I'm not sure that you're going to see the kind of investing you would need in infrastructure that can explain the increases in prices. But I think that's that part. So part of the story holds up, part of the story doesn't.
But even if this part of the story holds of the tax code getting the dollars back, that would still mean a short EM trade.
It's I think the EM trade is more a reflection of what's going to happen to global, because that's the other part of the Trump story, is tariffs and barriers to entry, kind of a stepping back from this inexorable move towards globalization we thought was going to happen forever. So I think we're going to, and it's not just the U.S., you're going to see this play out in Europe, you're going to see this play out in many developed markets, is you're going to start to see more barriers to entry, more tariffs. And that can't be good for emerging markets. That's really, I think, what's driving this DM-EM trade, is less about infrastructure and interest rates and more about trade and tariffs and barriers to entry.
The commodity cycle, after a long lean patch, or what looked like, a 3 or 4 year lean patch, we saw commodities bounce back admirably in 2016. Will that story continue in 2017, which will mean you must have faith in China?
Yeah, that's exactly the point to make. I mean, let's face it, if you look at a 100-year history of almost every commodity, you'd see the history from, let's say, 1915 through 2002, 2003. Then you get this decade in commodities, which is the China decade, right? You take iron ore prices, you take oil prices. Basically, you went from an average price of $25 a barrel to a price of 80, 90. I think those days are gone. You're not going to get the kind of bump in commodity prices you got, because that was an unusual decade. It was China building up infrastructure and buying up all the iron ore in the world. That story is no longer going to have, so even if you're going to get a bounce back, if you're a commodity company, don't expect oil to bounce back to 100. Iron ore prices are not going to go back to $80 a ton. So I think whatever bounce back you have will be a measured bounce back. Those glory days of, hey, prices will go up 10, 15% a year, those are behind us.
Well, we need to take a break on that note. That was a lot of globalization questions, but after the break, we're going to ask Professor Damodaran about more India questions and the big elephant in the room, demonetization.